Good morning, good day, everyone. I'm congratulating, first of all, you with good weather. I don't know how about your country, but in our country, finally, we get really good weather. One more time, welcome to our show, Moneylogy, where each week, together with Vala Romaya, we share our experience, our ideas for you, how you can get to financial freedom faster. Hi, Vala.
Hi, Yurish. Hi, everybody.
As a reminder, our mission is to help people to achieve financial freedom through business or investing, and through that to have more options to live a harmonious life for you and your family. And we have a big vision actually to become biggest community of financially free business owners and investors living harmonious lives. So if you are interested in these topics, just watch our show. All previous shows you can watch on any channels you like YouTube, Instagram, Facebook. Just follow us here, and each time we have a topic prepared for you. As well, you can ask questions during live show or watching a recorded version just in the comment section, and we will be more happy to share our answers with you. So today's topic is actually connected with one of the probably most common strategies for people when they start investing. And actually, from my opinion, there are two strategies. And one of the ways how you can invest your money is actually capital gains. So, Voila, what do you could say about the capital gains? What does it really mean, and what are the cons and pros of such approach to investing?
Yeah, I would say that capital gains is definitely an important part on the journey to financial freedom. And I would say that it's more like a middle step. First, it starts from putting money aside, and eventually we want to have cash flow. But in between, we need also capital gains. So I think it's really important to have a clear strategy how to increase capital so you could start investing and converting the capital to cash flow. So yeah, I would say that it's especially in the beginning, increasing capital is one of the key steps.
Yeah, I'd say actually that the main difference probably between the capital gains and the cash flow investing, which you said, is that one way is like Robert was saying, and I like this similarity. It's like killing a cow and selling a meat. Each time you need to find a new cow, you need to either to grow the cow or to buy the cow which is priced less, but you know that you can sell it for a higher price. And then basically you kill the cow, you sell the meat, and each time you need to find a new cow. And the cash flow is a bit different because in this case you're basically like milking the cow and selling a milk, but cow stays with you still. So I would say that looking from the perspective of risk, the capital gain is always connected to the higher risk than the cash flow. Would you agree with on it?
Yeah, I definitely agree, and I would say that at least in our mindset and philosophy, cash flow is the king. I mean, capital is like young brother. You might need it, but actually the cash flow is the king. So I would say that true investing is still investing in cash flow.
Exactly, yeah. And the reason why a lot of people actually is fascinated with capital gains, I would say, is because it's much easier to get the capital gain than to create a really steady and high quality cash flow from your investing. And that's why even we were doing seminars for a lot of real estate brokers. And the funny thing is that when I ask a question for the real estate brokers, so how many of you invest in real estate? Basically, only few of them raises the hand. And it's really an interesting thing because we are in the market where we can get an access to the early deals. The first person who touches the deal is the real estate broker. And instead of focusing on buying a property and renting it out for them, they are still looking for the capital gains, which in their case is actually even the fraction of the price which is sold for the property, because they just get the commission. But for them, it's much easier way of earning the money, just being between the deal and getting this part of the capital gain when just using their knowledge to invest for the cash flow.
Yeah, I would say it's like part of the strategy. It shouldn't be the whole strategy, because like you said, otherwise you're like on and off the market all the time, and doesn't make any sense, because eventually you want to grow yourself a cow that would produce milk for the rest of your life and maybe also for the next generations. So it's definitely part of the strategy, but it should be maybe smaller part of the strategy than cash flow.
I would say it's like you know the top of on the pie, because if you are focusing on the cash flow and do it really well, then basically occasionally you will still get the capital gains, but from the priority side, the cash flow is the first one and the capital gain is the second one. At least this is how I invest. And occasionally, just recently, we also sold some of our properties we had, but it was not because we were aiming for the capital gain, but because all these years we were getting quite a good cash flow from these properties, and now when the market was going higher, it was a good time to sell it and reinvest the money to another property with better capital, with a better cash flow. So in this case, basically, you are not aiming for the capital gain, but you're just getting it as an award for the really good strategy for the cash flow.
Yeah, I think part of the reason is also that a lot of people think that it takes money to make money. I would say that it takes some money to make money, but actually you can also use leverage and you can use bank and loans. So actually you want get faster, knowledge, and you want to get faster to cash flow. So sometimes you just get in the loop of playing the capital gains game, but maybe the long-term vision is not there. So.
Exactly. And if you be betting on the capital gain, it's risky also, because sometimes it can happen that market will go different way when you are expecting, and basically when you are in the highest risk, because let's say you took a loan, you was buying whatever property or some other asset, and you was expecting to sell it higher, but suddenly the market went down, and you still have the loan but can't sell the property for the higher price. So this is probably the biggest disadvantage of aiming for the capital gain. But if instead of that you are first of all calculating what would be the appropriate cash flow from the deal you are willing to buy, and it's okay for you, then you can still wait for as long as you want until the price will go higher again, because you are happy with the cash flow, which also can covers the deal, cover the loan payment, and you're not at the risk of being in the position that you won't be able to pay the loan. So this approach is much safer. But of course, there are a lot of different ways how we can invest in different asset classes, and also capital gain is one of them. And in Starfish vocabulary term, actually, we would like to present one of also ways, which is type of a capital gain, but mostly used for more advanced investors, and it's called arbitrage. So what does it mean, arbitrage? It's the way of simultaneous purchase and at the same time selling of the same asset class, just in the different markets. For example, imagine that you are willing to buy Apple stocks, and the price for Apple stocks in New York Stock Exchange and the London Stock Exchange at the same time can be different because of demand and supply, because of people who are willing to buy and sell stocks at the same time in these markets. And basically, this small difference, which can be, let's say, 2 cents per share or something like this, can be the way you earn your profit. So in this case, you buy the shares in one stock and right away sell it in another market, and the profit is this tiny difference between the price listed. So it can happen in stock exchange, it can happen also in commodities market, and this is also the example of capital gain, because this arbitrage profit is exactly the capital gain you earn. But like I said, it can also happen so that while you was buying and selling, the price changed, and you actually can't sell for the difference. So this is just one of the ways. So, Vala, what you would be thinking about? I clicked a different button, and just wanted to show you our new introductional video. Yeah, so what would be your thoughts about the tips for these people who didn't know the difference between capital gain and a cash flow, and was willing to start investing? What would be probably the first steps for them to be in the market, but at the same time not to have so high risk, just willing to get the difference in capital gain deals? So
Yeah, I would say it's just Yeah, I wouldn't say that one is better or the other. I mean, it's more like what is your goal? If you would like to, you can decide to also be a trader. You can be a day trader, like in this arbitrage case. So, it's not saying that investing is better than trading, but I would call it with the right name. So investing with cash flow, I would call investing, and doing the capital gains deal is more like trading because it's like short term. So, but it definitely plays part of the strategy, like I said. So the more capital you have, the more choices you have, also finding cash flow deals. So I would definitely say that it's the middle part of the process, and especially when you start investing, I think there's a certain time when you should collect capital, and but eventually the long-term strategy, at least in my understanding, would be much wiser to invest to cash flow, because then you make the deal once, but it will pay you for the rest of your life, versus doing the ins and out all the time, and every time you make a profit and come out from the market, you have to find another deal, and it's more like a work. So what we are looking for is more like passive investing, and maybe it takes longer to find these cash flow deals, but we are looking at more as a long-term perspective.
Exactly. And if you still don't understand the clear difference between a cash flow investing and a capital gain, one of the suggestions which really helped me to get this in my mind and really deep in my mind is playing a cash flow game created by Rich Dad. Because this is where you can basically experience the difference. Because when you, let's say, sell stocks, usually is a capital gain. But if you buy a property for the rent, then it's actually the cash flow investment which you can have.
And yours, ideally you would actually get both, because it would be even the best way if you get cash flow and the value of the property appreciates, which means that you also get the capital
Exactly.
gains if you decide to sell it. Yeah.
Yes, just like we discussed, this is not your main goal. This is why you are not like so emotional when you see that price is dropping, because you are still getting income from the cash flow, and you can wait as long as you want, 2 years, 3 years, to price to get better and higher again. And if you are, let's say, for example, doing a flipping instead of buying a property for renting, then your expectations is actually to get the profit from the capital gain faster. And if the market changes, then basically you can be in a different position. But if you buy
Yeah,
for cash flow, yes, you will get eventually both things.
yeah, and I think this is maybe something to notice also if you're thinking of your way of investing. That if you're looking for a deal, is it a capital gains deal, is it a cash flow deal, or is it both?
Exactly.
Because there are three options, and of course, ideally you would get the both, because the capital gains could be the bonus coming with the cash flow.
Exactly. I remember even when I started to invest in stocks just during the last crisis and 2009, I was buying some stocks exactly because it was my dividend strategy. And dividends actually is one of ways to get cash flow also from the stocks. And even though the price was dropping still lower, I was buying the stock because from the other indicators and especially dividends, it was a good stock to buy. And this helped me to sleep well at night because I wasn't like sad because the price was dropping. And in few years, the price dropped back again and even higher. And I sold the stock with quite a good capital gain. But again, what helped me to do this was my focus on the cash flow instead of capital gains.
Yeah, that's the good thing about dividend stocks. If the price is going down, then actually the dividend is going up. So it's like a security pad, which you will always have, and if the price goes up, it's just a bonus for the future.
Exactly. So now you know what are capital gains possibilities for you, and if you're interested in investing, just first advice from me would be still invest first of all in your financial intelligence, in order to really build up the plan how you're gonna invest in the future. What will be the deals you are going to use? Will it be a capital gains deal in the beginning, or cash flow right away, or both of them? And even more important, also not the type of capital gain or cash flow deals, but what are the asset classes you are aiming for to get the capital gains or cash flow. So if you like these topics, like I said in the beginning of the show, feel free, just write your questions, and also you can write not only questions but suggestions of the topics you would like us to include in our upcoming shows. And subscribe to the channels where we are: Facebook, Instagram, YouTube. Follow us here, because not only Moneylogy show but other content which can be valuable for you can be found here as well. This is for today, and let's meet the same day, same time, just next week with a different topic, which we hope also will be valuable for you and for your financial journey. Thank you all for participating.
Thanks and have a great week of investing.
Bye bye.